Hey YouTube, this is Zach with Achilles Financial. We're back with another market update. As you can see, this is the screenshot from when I had our trading completed on this past Friday. It is a 3-day weekend, so the recap video is being filmed today on Sunday, September 6th. So it was a crazy day. Despite the fact that the past 2 days the market has really gone down pretty significantly. As you can see, we've continued our upward climb, albeit not at quite the same pace. So today, the point of the video is how you too can trade during uncertain times, and in particular when the market is selling off. On Thursday, most of what I was doing was basically doing some short-term trades. What I did on Friday, which is I'm going to show you those trades here momentarily. I ended up having 16 active trades. And as you can see, because my account is under $25,000, I am not actively day trading, but rather what I'm doing is I'm buying and selling calls that are out of the money, and then I am buying and selling those calls that are farther out of the money, calls as well as puts. So let's dive into how I'm doing that. So as you can see, I've got up here on the screen just this month's trades. What we're going to be focusing on is here at the end of the screen. Again, this is all from this past Friday, just all the way down. As you can see, I didn't really play the bank stocks well in terms of the put side that you see here. I was able to make a quick profit off of my Bank of America call that I had purchased that day before. If I had held this kind of a little bit longer, it would have ended a lot better. But that's okay. Again, you can see that $10 into $19 is still pretty solid. Going farther on into the trading, the big money moves that we made was buying and selling Nvidia as well as AMD calls and puts. So you can see that I am actively selling these when they make their move and then buying farther out of the money. So this is just a trading history to show you that I am making these trades. I understand that this isn't necessarily the easiest way to understand this information. So let's dive into ThinkOrSwim so I can show you kind of how these trades that you see on the screen translate into actual profits. So here I have on the screen Nvidia. These are all of my trades that I made. The key items that I want to highlight here is we do have 2 puts, or rather 1 purchased put, 1 sold put, as well as I have 2 purchased calls and 2 sold calls. So what I ended up doing here is, as Nvidia was declining this past week, what I ended up doing, and I'm going to dive in here just a little bit closer. What ended up happening is, as the market sold off during the day, I ended up buying puts that were going down, and as that decline really picked up, I would sell a put farther out of the money. And then when I thought that the stock may come back up, and we did see some of that green coming during the rest of the day, and the way that I was watching Nvidia stock is I had up Apple stock on my screen because Apple really was acting like a leading indicator during that day, particularly for tech. So that was how I was making these call trades, and then what I would end up doing is, as that went down, then I would make that trade to purchase it. So if we look at that initial put, as you can see here, this is how you would profit off that put. And this is a pretty significant decline. But as the stock moved farther to the left, what I then did is I sold a put farther out of the money. So again, as you can see here on the screen, what we're looking at here is we've got my 450 put that I purchased. I purchased that for $650. That is currently going for 190 right now. However, what I ended up doing is I sold this one farther out of the money for $925. So this is technically the trade. This one's farther out, but I was able to ride that momentum. So I went from this graph right here to this graph that you can see here, where under a worst case scenario for this trade, I would profit by $273, and you can see that up here in this left hand corner of this box. However, if the stock does continue to go down, you can see my max profit is $523. But what this enables me to do is A, not utilize a day trade, and B, lock in those profits. So that was on the put side. What I then did is the exact same thing on the call side. So I purchased these two calls right here, leaving me with this trade that you can see here. And that is a lot of upside, although the stock really has to move. So again, if you just look at NVIDIA, then NVIDIA has not moved that much, aside from, again, we did have some big days. But it's a huge move to get into the money, and all of these contracts that we're looking at do expire at the end of this week. So what this looks like, though, when I sold those contracts is a little bit smaller spread, so I was only able to lock in the 732 spread right here for guaranteed profit. However, what does that look like for everything? So at the bare minimum, I profit $280 no matter what. However, if the stock drops by a ton, I can profit as much as $531. If the stock goes up a ton, because again, this is pretty significant moves either direction, then I can profit as much as $1,030. That would be the ideal situation there. But the important thing to note here is that it's probably, I'm not going to get hurt on this side, and I'm hopeful that it rockets upwards. But even though I have the upside and downside covered, we still have all of this space here in the middle where the best I can do is, or the worst I can do is $281. So that was NVIDIA. I did the exact same trade on the put side. You can see that here with AMD. The best case scenario $118, worst case scenario $18. So again, smaller stock and not necessarily the same volume on the trading. So that was the plan there. That's the trading that I'm looking at performing at this point in time. Is we are in a very volatile market. So I don't have the capability to truly day trade, and some of you may find yourself in that position. But what you can do is sell, or rather buy those options and then sell them when it starts ramping up. Again, an $18 trade isn't necessarily groundbreaking, but on my initial put that I purchased that for $181, which means at the bare minimum, over a 7-day time period, I was able to lock in essentially 10% profit. However, the complete upside is over here at $118 profit, which at that point in time we're looking at a 60 or 70% profit, although we don't necessarily want to see that much of a movement on this stock. The idea behind this is that even while your long-term trades or your actual stocks are going up or down, you're able to play the volatility and truly make some money. This is one of the key ways that I encourage all of you who are investing to go ahead and make sure you're able to hedge some of your bets as well. If you had some trades like this, please drop those in the comments below. If you have some stocks you're looking at, please comment that as well. In the meantime, I appreciate your time today and appreciate your support.